What's up, everybody? Just give me a second, let everybody join, or people that want to join come on in. Hope everyone's having a good weekend. And hopefully everybody was safe during the market conditions this past week. And just to give a heads up, and I want to get this out of the way real quick, I am not a financial advisor. Any of my videos or this video is not financial advice. This is for educational and entertainment purposes only. Do not take anything I say as investment advice. Just to get that out of the way. Alright. Once again, I hope everyone's having a good weekend. Just going to do a little video here. We've seen the market get very volatile last week with a little, I would say, little crash that we had. We've seen the market do this now 3 times this year. Let me pull up the daily on this. So I thought we'd do a little video and go over inverse ETFs and ETFs. I'm not an expert at ETFs and inverse ETFs, but I know the general concept of ETFs and inverse ETFs. So this is the SPY right here, and this is the beginning of the year right here. And right at the beginning of the year, we witnessed this pullback from 286 all the way down to this 200-day at 250. Then we had a bounce up, another pullback, bounce up a little bit higher, and then we had this other correction right here, back right at the 200-day. And then it was just from there on out, the rest of the year so far, we just kept grinding up and up and up and up and up and up. Slowly but surely grinding. Overall, this has been a bull market with 3 corrections, 3 pullbacks we've witnessed this year so far. And this last one was pretty violent. It was more violent, I would say, than the pullbacks that we had here and here. This was some crazy action, and the most volatile day, I believe, was, I would say Wednesday was the most volatile day. It just kept dropping and dropping and dropping, and it would drop hard too. But this time, instead of bouncing really right off the 200-day, this thing the next day gapped down and it blew right through that 200-day. And then the next day, it did gap up and it closed just below this 200-day. So it's going to be interesting to see where this opens up on Monday. Now, this is the SPY. Now, look at this pattern right here. Now I'm about to type in an inverse ETF, TVIX. Zoom in on this. Now, if you were to take a mental picture of that last chart, Remember those big pullbacks we had? And this is spiking up. And you got your spike up right here. And then you got your move up right here. This is an inverse ETF. So whatever the SPY does, an inverse ETF like TVIX will do the mirror opposite of whatever the SPY does. So if the SPY goes up, this will go down. If the SPY goes down, this will go up. They say inverse ETFs are not something that you invest in, because it's a decaying stock. As you can see, this thing, it just goes nothing but down, down and down and down. And when the market gets volatile, like it was the past week, this is when you take advantage of the volatility and you day trade. So TVIX here, as you can see, we got Friday, Thursday, and Wednesday right here. Now when the market starts crashing or having really, really big pullbacks the way it did, look at the moves this was making. And it makes very, very aggressive moves. You can see here from $32, this spiked up to 35 and then hit 36. And then at the end of the day here, it goes from 34.5 and rallies all the way up to 42. And this is opportunity here. Even when the overall market is red, there's opportunity in these inverse ETFs. And I just wanted to make a little video today and just kind of go over the general concept of inverse ETFs and ETFs. Now, they don't just have this for the overall market, the indexes like the SPY, the NASDAQ, and the Dow Jones. They also have these inverses for gold, silver, commodities, oil, gas, anything like that. I believe DGAZ, DGAZ, is a gold ETF. I believe so. No, it's a natural gas ETF. So I wanted to kind of go over in this video a little bit and look at websites and look at ETFs and inverse ETFs and pick out ones to always keep on the back burner. You know, when a sector or an index starts to make very, very volatile moves, you could take advantage of that as a day trader. Now look at DGAS here. Now let's look at this on the daily. You can see it's going from 1350 to 31. I just know of a couple inverse ETFs. I know DGAS, TVIX, UVXY, JNUG. This is gold. But I got a website up right here, and I thought we would just jump in it and just start looking into it. Like I said in the beginning of this video, I'm not an expert on inverse ETFs or ETFs, but I've always wanted to learn more about it. So today I thought I'd dig in and start learning more about it, and I figured why not make a video and share my process of learning this and show you guys, and so you guys can learn as well if you don't know about it. I just remember back at the beginning of the year of 2018 when the market was correcting itself and it was seeing these big pullbacks. here on the SPY. And TVIX was cheap. TVIX back in this area was like $8 to $10, and it would run all the way up to $20 and then fall back down to, I'd say I think it was like $12, and then it ran up to $30. It was making crazy moves. And I told myself the next time the market corrects itself, or in the future if the market crashes, I'm going to be prepared. And that was around this time right here. So I had all this time right here to learn about it, and I never did. And look what happened. It happened again, and I wasn't prepared. So I didn't even trade the inverse ETFs this past week. I traded Monday, Tuesday, and Wednesday. I was profit all 3 days, and then Wednesday, right after I made my third trade, that's when the market went to crap, and I didn't trade the rest of the week. But if I would have known, I know about the process of the inverse ETFs and the ETFs. It's just I didn't act on it. So let's pull this back up. So let's say in the news you wake up and you hear gold, something bad happened with gold, and it's making very, very volatile moves, and it's dropping hard. You could take advantage of that with the inverse ETFs. Now, if you go on YouTube, there's all kinds of videos you can watch on ETFs and inverse ETFs. And the past couple days, I've been listening to a lot of videos and watching a lot of the videos, and a lot of them are saying you don't invest in inverse ETFs because they are decaying. They're all of them are decaying. They're slowly but surely dropping off, and you only trade them when something like gold is making big moves. You just trade the wave. That's it. And they have all kinds. Let's see real quick. They even have blockchain ETFs. So let's go to this. I don't even think this was the right site. I had a site that was just really, really, really good about this. Let's go to the screener real quick. So you see the SPY here, SPY, is a spider S&P 500 ETF. All of these are ETFs right here. So you got the VXX, iPath, S&P 500 VIX, short-term futures, ETN, and then you got the TVIX, velocity shares daily, times 2 short-term ETN. So you'll see times 2, times 3, you'll see bearish, you'll see bullish. The times 2 and the times 3, that's how volatile it is. That's how big it can move. UVXY, I know that one. pretty much the main ones I stick to is TVIX and UVXY. So let's look at VIIX. And you can see here, the past 3 days, the VIIX went from 1250 to 1635. And this is on the 5 minute, or the 3 minute, I'm sorry. They also have currency ones. Currency, commodities. So let's see what natural gas. See DGAS, UGAS, UNG, boil, cold. And DGAS is 3 times inverse, and UGAS is times 3. Let's see DGAZ. See, leveraged times 3. Analysis report. Let's read this real quick. This ETF offers 3 times daily leverage to natural gas prices, making DGAS a powerful tool for expressing a bearish outlook on the energy sector. It should be noted that the daily reset feature combined with the explicit leverage in this ETF make DGAS inappropriate for investors without the ability or willingness to monitor this position on a regular daily basis. Moreover, investors should note that this underlying index won't always move in unison with spot natural gas prices. Even over the course of simply a single trading session, for sophisticated investors with a fair amount of tolerance for risk and volatility, this ETF can be a very powerful tool, but DGAS shouldn't ever be found in a long-term buy or hold portfolio. It's simply too risky, and the nonsense of this fund makes significant losses possible when held for an extended period of time. In volatile markets, DGAS is a trading instrument and should be treated as such. So it's telling you right there, you don't invest in these. You don't invest in this. You just trade it. When it gets volatile, when the natural gas gets volatile, you trade it. That's it. And then this is just a lot of fundamentals on it. But you could see here, it's a declining inverse ETF. Yeah, they always do splits on these. They pretty much just set the reset button on this. They'll hit the reset button, the price will get reset back up, let's say $30, and then it'll just from $30 decline and decline and decline, let's say all the way down to $10, and then they'll hit the reset button again, and then they'll reset it back at $30, and then they'll decline it. This is just another opportunity to learn about the markets. You know, when penny stocks dry up. Like as soon as the market started crashing, all the volume disappeared from the penny stocks, and a lot of your stocks like Facebook and stuff like that, because everybody was looking at the indexes, looking at what the Dow Jones would do, the SPY, the NASDAQ. And when that happens, that brings up another opportunity in the market. And that's when you could take advantage of the inverse ETFs and the ETFs. You got to think of the market is just this one big gigantic casino. And what do you do in a casino? You walk around to different areas in the casino, and there's different places you can play different games and gamble at different places and play, and that this is just the same thing but online with the stock market. Let's see. Let's go to most traded ETFs. See, we got EEM, the SPY, ELF, GDX, that's gold. So let's see something real quick. GDX. Let me put a couple of extra periods in here so I can see. Do you guys have any questions? Don't be afraid. Feel free to ask any question you want. I'll try to answer it the best I can. There you go. Or no, looking at natural gas. So these are both gold ETFs. And you can see how they're pretty much both exactly the same. Just one's cheaper, one's a little bit higher in price. That's the thing with using free sites. You always got to deal with the advertisements. So these are the most popular ones right here. They even have the iShares, the Russell 2000 ETF, IWM. I can't remember the Russell 2000. Uh, Hold on. RUSS. I don't know, I can't find it. But the QQQ is one. That one goes with the NASDAQ. Let's look at that one. Oh my goodness. Go to the market strength here real quick. Let's go over this. Every weekend we were going over this. And what was I saying every single weekend? I said it feels like we were just like gliding on air when we would come up to the highs. We would come up every time we'd come up to the high, it would just make a little tiny bit high. That's it. It would make an all-time high, a little tiny bit, and then it would pull back down. And the NASDAQ was given the first signs of a big pullback. It blew through the 50-day, it blew through the 200-day, and it was gliding right below here at the 200-day, right here. And then, boom, look at that drop from 87 down to 79. And then the NASDAQ here, like I said, we had a high here. Well, it was coming up, made a high here, here, and then we finally broke the high right here, and it wasn't by much. And then we made new high here, and then we had a pullback, made another high here, pulled back, failed, bounced off the 50-day, and then boom. This is why you go over and look at the futures every morning, and you just keep an eye on the overall market, the overall indexes every day to get a general idea of how the overall market is performing. I look at the Dow Jones Industrial Average, I look at the NASDAQ, and I look at the SPY every single day. And then we also go over it every weekend to see how it performed. 3 out of 4 stocks follow the overall market. Let's go to blockchain ETFs. So we got BLOK. Let's look at that one. This is a fairly new one. This one opened January 17th of 2018. You can see it made this pattern here. Right there. And then it also had a resistance right here. So we had an ascending wedge here, getting tighter and tighter and tighter, and then it fell out, and look at how hard it dropped. Another one I know is RIOT, right? Riot. Pretty much anytime the Bitcoin, which one is that one? The big Bitcoin spikes, this one will spike. This was back last year during the summertime and going into the fall when it just went absolutely insane, breaking over 10,000, going all the way up to 20,000. This one went from $4 to a high of $47. So anytime the blockchain or the cryptocurrency market hits up, you look for the sympathy plays like RIOT, Long Island Iced Tea. That one's, I think, LT or something. But they changed their name to Long Island Blockchain or something. You look at all these blockchain companies. That's what's fascinating about the market. When a sector starts to heat up, you look at all the stocks that are in the sector, you look at the ETF, the exchange traded fund that's in that that's affiliated with that sector. You compare it with the inverse ETF. There's just all kinds of opportunity out there. And that's what's great about the market is you get to do whatever you want and trade whatever you want. But I'm going to dig more into this and the ETFs and the inverse ETFs on my own. I thought I'd just make a quick little video to show you guys a little bit about it, what it's about, and just learn more about it. Because when the market makes big volatile moves like it did the past 3 days, you could take advantage of that. You know, a lot of people think just because the market's crashing, you can't do anything but watch. That's wrong. You know, if you were to watch the movie The Big Short, that's a great movie. That guy made a killing on the last stock market crash back in 2008 when the equities market crashed. Made millions and millions of dollars. But look more into inverse ETFs and look more into ETFs and just learn about it. But this is just a little short video for you guys just to put out there. Hope you guys enjoyed it. Hope you guys are having a great weekend. Make sure you guys study up, prepare for the upcoming week. I have a feeling it's going to be another crazy week ahead of us. We'll see what the market does as here within the next couple weeks too, we're going into earnings season for a lot of these large cap companies. So until next time, guys, be patient, be disciplined, and study, study, study. All right, guys, later.